When Donald Trump launched his trade war, his goal was clear: to rein in China and reassert America's economic strength. However, his strength attack seems to be backfiring as the US dollar continues to tumble, weighted down by aggressive capital outflows and mounting investor uncertainty about the long-term economic impacts of his policies. Experts have previously stated that only a weak dollar could attract foreign investors back to India, and explain that this shift is now unfolding as a result of Trump's tariffs strategy, while also noting that tariffs may not have been the ideal negotiating tool for the US president. Now, the weakening US dollar is further complicating his strategy. The dollar's decline has already made imports more expensive and US exports cheaper, essentially achieving the same result as tariffs. However, the shrinking value of the dollar is putting inflationary pressure on the US economy, which means that any further escalation of tariffs could inadvertently worsen the problem. Goldman Sachs has added its voice to its growing concern. The investment bank recently projected that the dollar could fall another 10% against major currencies like the euro and yen over the next year. This drop is tied to broader economic factors such as the slowing US GDP growth and the ongoing impact of trade tensions, including the tariffs that Trump championed. A weaker dollar means that America, rather than other countries, may bear more of the burden from the trade war. The problem Trump faces is that his trade war strategy could backfire. If the dollar weakens, the US may end up with more inflation and slower growth, undermining the very benefits the trades were meant to deliver. Worse yet, the pressure on American consumers could mount, forcing Trump to reconsider the path he's chosen. Trump's signature tactic of bold bargaining, making big moves to set expectations and then scaling back, has worked in the past, but this time the stakes are higher. Experts say that Trump loves to throw a bomb into the room and adjust afterward, but this is a gamble. If tariffs hits 10%, the US economy could slow down by nearly 1%. And as inflation continues to rise, it seems like this gamble might be spiraling out of control. The trade war's unintended consequences seems to be forcing Trump into a tight corner. While his tariffs were intended to shift the burden onto other countries, the dollar's decline may leave the US carrying more of the load. As the world waits for a deal that seems increasingly unlikely, Trump's tariff strategy looks increasingly unsustainable.